How many of you knew that the banking system almost collapsed in 2023? First Republic Bank, Silicon Valley Bank, Signature Bank, and Silvergate Bank. These banks all collapsed. This is the second largest bank in US history, the third largest bank, and the fourth largest bank in US history to collapse, all in the same year. But where this gets interesting is out of the four largest banks to collapse, two were saved and two were allowed to fail. Why? What happened? Was this an attack by the Fed on cryptocurrency? Today, we're going to look at what happened to these banks and why some were allowed to fail. And we have a fantastic story that is showing that things are starting to change. Welcome to Let's Learn Crypto 101, where we pick out the stories in crypto to show you how money is changing so you don't get left behind. And we're going to start today with a very interesting quote from Henry Ford. Who is Henry Ford and why does his opinion matter? He is the Henry Ford who created the Ford Motor Company, one of the most successful companies in the world. He said, "It is well that the people of the nation do not understand our banking and monetary system, for if they did, I believe there would be revolution before tomorrow morning." Please like, comment, and subscribe. I really appreciate it. Now, let's get into the story. The Federal Reserve has quietly removed crypto guidance that it had given out to banks, and it was very unfriendly towards crypto, basically trying to scare the banking system from having anything to do with cryptocurrency. So to understand why this is such a big story that is so easy to miss, we've got to go back to the year 2022 and 2023, and we'll have a look at what happened with the banking system. It all started on March the 8th, 2023, when it became apparent that the banking system had a lot of overexposure to the bond market, and it started with Silvergate Bank. They collapsed on the 8th of March. They had $11 billion of assets under management. Then, on March the 10th, 2023, Silicon Valley Bank collapsed. They had $209 billion of assets under management, and this was the third largest bank ever to collapse in US history. On March the 12th, Signature Bank collapses with $110 billion of assets under management. This was the fourth largest bank in US history to collapse. Then, on the 1st of May 2023, First Republic Bank collapses. They had $229 billion of assets under management, and they were the second largest bank ever to collapse. Now on this chart, I'm going to show you something very interesting that happened around this time. Now there are a lot of people out there that don't really understand Bitcoin, and a lot of people tell you that it's very risky. But actually what happened, if we look at the price chart around the same time to Bitcoin, people started to understand what its use case really was, and it's a way to escape the failures of the banking system. So if you look at the chart, the 8th of March, Silvergate Bank collapses. Now there was a lot of panic in the system at the time, so the price continues to dip. We hit the 10th of March, where Silicon Valley Bank collapses. And that sends shockwaves around the world of what's happening with the banking system. Is it collapsing? The price starts to rise. We hit the 12th of March, Signature Bank collapses, and people are terrified. They're panicking. Where do I put my money? And they put it into the most liquid asset on the planet, which is Bitcoin. The price starts to explode at exactly the same time that the banking system is showing signs of failure. That many large banks collapsing at the same time shouts, is the banking system about to collapse? There is a systemic failure happening. People were terrified. They wanted to put their money into something quickly. You couldn't put it into property. You couldn't put it into gold. You couldn't put it into stocks. That takes time to do. So people threw it into Bitcoin, and the price exploded. And as you can see, it was from that time period on that the market just kept going, and First Republic Bank collapses on the 1st of May. But from this point on, from the beginning of the collapse of these huge banks, the Bitcoin price has gone up ever since, showing that people started to wake up and understand that Bitcoin has a very specific use case that you can protect yourself from third-party risk. Now, how did this happen? Well, it all happened in the bond market. So what happens is, banks will take a lot of their cash reserves and lock it up in the bond market. Well, the thing about the bond market is if you buy a 10-year treasury bond, your money is now locked up for 10 years. Now, it's not a problem if you're going to hold it for that full 10 years, but where it becomes a problem is if you have to sell your bond to get back some of the cash to satisfy customer withdrawals. The 10-year Treasury bond, or bonds in general, is you lending money to the US government. It's seen as one of the safest assets in the world, and it will pay you an interest rate on that bond. So if you put £1,000 into the US bond market at a 2% yield, then at the end of 10 years, it will have paid you 2% every single year, compounding, and that's a nice risk-free rate. However, when you factor in inflation, say that's running at 3-4%, you're actually losing money. And this starts to play into what happened within the bond market. So a lot of banks, they know inflation is happening, so they don't want to hold the money in their account because they're losing the value of money every single year. So they need to put it into something that's going to give them a return. The bond market is seen as risk-free. However, where it becomes risky is if you are likely to have to sell that bond before it matures, before the end of that 10 years. How this works is, if you put £1,000 in and you bought a bond and it's a 2% yield, great, you're holding it for 10 years. Something happens, you need that £1,000 back. You would take that bond to the market and say, I need to sell it. But the value of that bond is determined by what the interest rate at the time is. So for example, you have 2% yield on your £1,000 bond. You then want to sell it to someone. But if the interest rate is currently paying 3%, what incentive is there for somebody to buy your bond? There is none, unless you reduce the value of the overall bond. What was £1,000 is now worth £750. You have to be able to encourage somebody to buy it from you by lowering the overall price. That is how it would work for me and you. It's the same for the banking system, but they're dealing in hundreds of millions, if not billions of dollars worth of assets. So you can imagine if they take their bonds to the bond market and they go to sell them, they're at a loss. This is what happened. Most banks had locked in a 10-year Treasury rate of around 2%, but the Federal Reserve very quickly increased the interest rates. The bond market was now paying more than what the amount they had locked in was. And then there was a moment where there were liquidity concerns and people were rushing to the banks to take their money out. This is quite literally a bank run. But these banks like Silicon Valley Bank had locked their money up for 10 years in the US bond market. They had no way of getting the money back. So they literally became illiquid, insolvent. They had no money to give to their customers. The bank collapsed. Why? Because if they were forced to sell all of their bonds on the market, they were at a discounted rate because the interest rate was now higher. Their bonds were worth less. This particular issue was the same issue that affected First Republic Bank, Silicon Valley Bank, Signature Bank, and Silvergate Bank. But the Federal Reserve stepped in to save First Republic Bank and Silicon Valley Bank. But when we look at this chart here, what is the difference you notice between all of these banks that collapsed? The only difference is that Signature Bank and Silvergate Bank had links to crypto. They were servicing crypto customers and businesses that were based around crypto. The Federal Reserve did not hide the fact it did not like cryptocurrency. So looking at this chart, you can see that there was definitely favoritism going on here. What looks like an attack on crypto was called Operation Choke Point 2.0. The banking system and the systems around it were choking off the banking system from allowing crypto customers, that includes retail investors and businesses around cryptocurrency. They would do this by imposing strict regulations. They could have a bank downgraded, saying that it was a risky bank and that could risk it being taken over. There was insurance premiums. The insurance to insure all of these deposits was sky high, making it almost unprofitable to service these accounts. And also, they had limited access to funding. These are parts of the reasons that led to Signature Bank and Silvergate Bank collapsing, and there was no help from the Fed. Fast forward to today, and these restrictions are starting to be removed. The Fed is now showing a more favorable approach to banks that may custody crypto, meaning there is more access for retail investors and companies that work within the crypto industry. This is reinforced even further when the OCC came out recently with a video. Who is the OCC? It's the Office of the Comptroller of the Currency. The OCC is a US regulator that oversees national banks. It charters, supervises, and enforces banking laws to ensure financial stability, fair prices, and consumer protection. It monitors risks, conducts exams, and can take action if banks break rules or mismanage funds. The OCC is the organization that deemed Silicon Valley Bank and Silvergate Bank too risky and wouldn't help them. Have a listen to this video, and it is absolutely incredible that this is being said.
More than 50 million Americans hold some form of cryptocurrency. This digitalization of financial services is not a trend. It is a transformation. Here at the Office of the Comptroller of the Currency, we confirm that national banks and federal savings associations may engage in certain cryptocurrency activities responsibly in order to serve their customers. OCC-regulated banks may provide custody services, including the safekeeping and secure storage of cryptocurrencies and other digital assets, all on behalf of their customers. The banks we supervise also may buy and sell cryptocurrencies they hold in custody at their customers' direction. Additionally, these banks may provide other custody services, including record-keeping, tax, or reporting services for their customers. OCC banks may use a sub-custodian to provide the same services, subject to appropriate third-party risk management practices. While a range of cryptocurrency and digital asset activities may be performed by banks and their third parties, I want to be clear that the OCC expects these activities to be conducted in a safe and sound manner and in compliance with applicable law. To learn more, please visit occ.gov.
So in summary, it might not seem on the face of it like the most exciting story in the world, but this is a massive sign that things are moving forward in the right direction. If you are a crypto investor or someone who is considering investing in cryptocurrency, obviously you need to do your own due diligence and understand what is going on. Is this a serious asset that I can invest in for the long term? Up till now, it's always been seen as a really risky investment, but things do seem like they're starting to change. Now, I hope you all enjoyed that. This is Let's Learn Crypto 101. Have a fantastic day, and remember, your time has been monetized. It's time to control that currency.